Assalamualaikum dan salam sejahtera. Today we'll be discussing working capital management or WCM, a crucial aspect of financial management that deals with a company's current assets and liabilities. The core objective of WCM is to ensure a business maintains sufficient liquidity to support its everyday operation while also meeting short-term financial obligations. When managed effectively, WCM enhance not only operational efficiency but also overall financial stability and profitability. For our analysis, we have selected Sunway Berhad, as well as established Malaysian conglomerate founded in 1974, headquartered in Sunway City, Subang Jaya. Sunway operates across a wide range of sectors, including property development, construction, healthcare, retail, and education. The company is listed on Bursa Malaysia Securities and is widely recognized for its integrated business model and commitment to sustainable development. Sunway Berhad was chosen for this research because of its diversified operations and transparent financial reporting. These attributes make it an ideal case study for examining WCM practice across multiple industries within a single corporate framework. By analyzing Sunway's approach, we gain valuable insight into how large, diversified companies manage working capital effectively to support sustainable growth.
For the inventory component, Sunway Berhad recorded an inventory valued at 2.55 billion in 2024, which slightly increased from the previous year. This inventory included construction materials, essential goods, and retail stock, such as items sold at Sunway Pharmacy. Sunway adopt a project-based inventory management system to align stocks levels to construction timeline and market demand. They also use demand forecasting and centralized purchasing across their business, especially in retail and healthcare, to avoid overstocking and reduce storage costs. These strategies help minimize aging inventory, especially for medical supplies and fast-moving consumer goods (FMCG). However, one challenge they face is the risk of unsold property units, which could lead to overinvestment or inventory impairment. This shows that efficient inventory management is crucial to maintaining financial stability. For account receivable, Sunway Berhad saw a slightly increase from RM 2.22 billion in 2023 to 2.29 billion in 2024. This includes payments from their healthcare and education sector, as well as progress billing from property development projects. To manage receivable efficiently, Sunway implements solid credit control strategies. These include customer verification, strict payment terms, and active collection procedure. This practice help limit their exposure to bad debt and ensure strong cash flow. Most of their receivables are current with minimal expected credit loss, which reflect disciplined financial management. Additionally, Sunway aligned its average collection period with industry standard, helping to maintain a healthy cash flow, especially in high-risk sectors like construction and real estate.
Okay, next I will be presenting about account payable, which refers to the money a company owes to supplier, subcontractor, or service provider. Okay, the first one is component. These are payment owed to external parties for good or service received but not yet paid. It's a key part of short-term liabilities in business. Okay, next, management strategies. Managing account payable involves negotiation payment terms to maintain good cash flow and strong supplier relationship. A decrease in account payable may show early payment or better financial discipline. And finally, balance focus. It is important to balance this well to avoid supply disruption or reputational risk while still making good use of supplier credit. In summary, managing account payable effectively helps maintain liquidity and build trust with supplier. Now we move to cash and cash equivalent. Okay, let me share some key growth drivers that support our company's financially strength. Okay, first, we have strong operating cash flow, which ensures steady income from our core business. Second, we manage our funds well through short-term investment and centralized cash management. Third, strategies treasury planning help us make smart financially decision. And lastly, we maintain a healthy level of cash and cash equivalent for liquidity. Now, what are the advantages of this? Okay, the advantages of this is it gives us financially flexibility to fund new project or initiatives, seize new business opportunities quickly, manage unexpected expense, and lastly, reduce our reliance on external debt. In short, good cash management drives sustainability growth.
Now I would like to present the cash management practices of Sunway Berhad. Sunway is a diversified group involved in property development, construction, healthcare, education, and hospitality. To maintain financial stability and operational flexibility across all sectors, the company practices strong and well-structured cash management. First, Sunway ensures that it always maintains a healthy level of cash and cash equivalents. As of 2023, the company held around 3.1 billion ringgit in cash. This large cash reserve helped cover short-term obligations and day-to-day operations without delay. Next, the company managed its receivable carefully. They apply strict credit control and actively monitor account receivables to avoid slow payment from customers. This helps improve cash inflow and prevent cash shortages. Sunway also exercises tight control over their operating and capital expenditures. They prioritize projects that bring the highest return, which means that they only spend on what is necessary beneficial in the long term. Surplus cash is not left idle; instead it is invested in safe and low-risk financial instruments such as fixed deposits and money market funds. This allows them to generate extra income while keeping their money easily accessible. Lastly, Sunway uses an integrated digital cash management system. The system consolidates the cash position from all subsidiaries into a single platform, which gives them real-time visibility and control over the company's entire cash flow. In conclusion, the main objective of Sunway's cash management are to ensure a sufficient liquidity, reduce the cost of short-term borrowing, generate return on surplus funds, and protect the business during uncertain economic conditions. These practices reflect a responsible and forward-thinking financial financial approach that supports Sunway's long-term sustainability.
How Sunway Berhad finance working capital? Number one, short-term borrowings. Sunway Berhad finance its working capital with very short-term financing instruments such as term loan, revolving credit, commercial paper, and medium-term note. This financing help Sunway Berhad ensure sufferings and strong cash liquidity to support daily operation and development and investment projects. Number two, Islamic capital market instrument. Muharabah Suku and Islamic medium term note are Sharia compliant financing conducted by Sunway Berhad. These funds are used for working capital needs and capital expenditures such as development projects. Number three, internal cash flow. In generating operating cash flow, Sunway Berhad has strong performance that play an important role in financing working capital internally. The increase in net cash from operating of RM 881 million compared to last year indicate a positive change in working capital management. Number four, equity-based financing. Sunway Berhad can increase the company capital without adding liability or additional costs by implementing a dividend reinvestment scheme (DRS) and warranty redemption. Investors are given the option to reinvest dividend in the form of share, and the warranty holder can convert warranty to ordinary share, indirectly increase company equity. Both of these actions have generated capital amount of RM 399.1 million. Number 5. Careful capital management. The Treasury Department of Sunway Berhad has played an important role in managing company working capital structure through a conservative and strategic approach. They manage the company working capital structure comprehensively, reduction financial risk, and adjusting the capital structure according to the market condition. As the result, long-term financial stability can be ensured, sustainability growth strategy can be support, and the company can always be prepared to face market uncertainty. Challenge and risk in working capital management. Number one, liquidity risk. Challenge is meeting urgent need to fulfill financial commitments and the mismatch between liquidity asset and financial liabilities. Sunway Berhad may face difficulties in meet short-term liability when it comes to due to the mismatch between cash inflows and outflows. Number two, interest rate risk. 57% of the total loans are floating interest rates, which expose to company interest rates increase and affect the company financing costs. However, some will perhaps use hedging instrument or interest rate swap to mitigate this risk. Number three, foreign exchange risk. Exposure to foreign currencies such as Singapore dollar and US dollar through overseas subsidiaries will affect the company assets, liability, income, and operating costs. However, Sunway Berhad use cross-currency swap (CCS) to protect profit margin and stability cash flow in certain global markets. Number four, high level of debt. At the end of 2024, Sunway had recorded an increased loan amount of RM 10.88 billion. Although the Sunway's financial stability is considered strong and positive, the exiting risk poses a refinancing risk in the long and short terms, as well as the need for restructuring in the event of market uncertainty. Lastly, asset depends and collateral. Sunday Berhad use asset as collateral, particularly investment, properties, and development asset to obtain financing. Secure loans can enhance the ability to secure better interest rates. However, this limits strategic flexibility in selling, revolving, and restructuring assets and market and make it difficult to obtain additional financing if most of assets are plagued.
Now, let's look at some ways to make Sunway Berhad's working capital even better. First, they should use better system to track inventory in real time and improve forecasting. This will help reduce extra costs and avoid old or useless stock. Next, they should speed up the collection of payment by offering better credit policies and using online payment system. This will bring in cash faster. Also, they should work in suppliers to get longer payment terms while still keeping good relationships. This will keep more cash in the business. Doing regular short-term cash flow forecast is also important. This helps the company plan for any sudden needs or problem. For extra cash, Sunway should put in safe, short-term investments so it's available when need but still earn some return. Finally, expanding digital cash system will help them see and manage all the company's cash more easily. Looking at the key findings, in 2024, Sunway had inventory of 2.55 billion ringgit and receivable of 2.29 billion ringgit, which show growth in their projects. Payable were slightly down at 2.57 billion ringgit and cash balance were 2.1 billion ringgit. This shows strong cash flow and careful payment of supplier. Overall, this means Sunway's good working capital helps them have enough cash Avoid taking on extra debt and stay ready for big projects or sudden market opportunities.